Welcome, traders, again for some live trading with me and the team here, Zach and Thomas. We got some Edgeful stuff that we want to cover on today's live stream. But again, yeah, if you guys can just introduce yourself. Obviously, me, I'm James Bruce. I trade live every single day on ASFX TV, as well as with Edgeful as well. So make sure to come check me out over there. Zach, if you want to introduce yourself, we've got quite a few new viewers that will be watching this as well on YouTube. So yeah, if you can just introduce yourself as well.
Awesome. Yeah. Guys, my name is Zach. A lot of people call me Zarb. Been trading for 4 years. I stream on ASFX and I trade mostly futures markets. I'm sure we'll get into that, get into some Edgeful reports. But yeah, good to be here.
Nice. Thomas?
Yeah, started trading in 2022. Been trading about 3 years now. I trade solely ES, the futures contract for SPX. And I love markets. I love talking about it. So let's get into it.
Nice. Okay, cool. Let's get right into it over here. So let's just pull up my, go like this. Let's see if we can go like this. There we go. Okay, let's speak about this. So we got the NASDAQ. And by the way, just Thomas, were you listening to the guy on Friday saying that you have to have the CFD contracts up if you're trading the futures contract? You have to have the cash markets up. So I don't want to ever hear that it's a fake market again.
That guy is well, he's dead wrong.
Say again?
Wait, he's saying you have to look at the CFD chart instead of the futures chart?
What he was saying.
I don't care whatever he was saying. It was we listening. We're going off of that. Okay.
So I'm in this guy's Discord now. This is what he was saying. He uses the cash market levels to help trade the ES futures levels and vice versa. So he's got this really wild, like in tandem type strategy where he's looking for the correlation of the stronger market to then trade the one that's kind of lagging behind.
Got it.
Wait, but what is by cash market? Do you mean you don't mean the
CFD pricing? CFD
that is
pricing.
What you mean?
Yeah.
Yeah.
Interesting. Okay, hey man, everyone's got a plan. That's definitely interesting. Good enough.
CFD pricing. He was basically saying that you need to watch the CFD charts in order to have a look at, like, he's just got between the correlation. I don't know.
Interesting.
I'm not too. I know that as Thomas was mentioning, he was looking at the levels from the cash pricing to. I know. Just speaking on this, I do know that some traders, there was like brokers have mess ups, right? So sometimes the futures pricing will be priced at this because it's obviously centralized and the cash won't move. So guys will literally short the cash market in order to catch up to it's quite interesting. It's quite wild. I've heard a few stories of that. But let's get into some Edgeful stuff. We have actually taken out the previous day's lows, which was obviously today's Monday. We've taken out Friday's lows, which is this white dotted line coming across here. But Zach, you're long. Speak to me and the viewers here a little bit why you're long and why you do like the longs off this level. Let's just bring up the chart.
You want to go to so we're on my chart. Okay, cool. So I am long on the ES from 60.29. Now I'm looking for a bigger move here. I would like to see us come up to midnight, which we can definitely get into some of those Edgeful stats, but also just like higher time frame context. I was recording a weekly review last night. I didn't post it yet. I'll probably post it later today, but it's honestly not even worth posting because my first lower hanging fruit target for this week was these lows right here. And I mean, we just kind of opened up and slammed down to these lows. I still think higher time frame that we actually may be looking into a bigger correction here, but I do think that we're due for a pullback first into some of this imbalance right here. And I think ultimately, like if we can use this level as a place where there's a ton of obvious stop losses, right? For people who got short a little too late in the game. What I'm ultimately looking for the rest of the week is for us to come up and take this high, tap into this imbalance, and eventually maybe consolidate, but build some type of reversal signals to then go lower. But so for the context of this long, what I'm seeing is we swept a higher time frame level, this 4-hour swing low. When we sweep that level, I was looking for just very textbook reversal signals, right? So for me, I was we just got a lot of lipstick on this chart. One moment. So for me, it was just like a line in the sand level. You know, I just like to use line in the sand levels. So we had, where is it? This fair value gap. If we were going to stay bullish or stay bearish in the way that we've been dropping here, right? Just really strong displacement lower. I would expect us to respect every bearish fair value gap of at least a 5-minute time frame, but we didn't. So we violate this gap right here. Then we do put in one more low, but it ends up being a higher low right here. And this was probably the best place to look for longs if you are aggressive, but I just didn't feel like being that aggressive here. Once we then got the market structure shift right here, taking out this high, that's when I got interested. And I just, I set a limit order inside this 5-minute bullish gap. And then that's where Edgeful comes in, because now I'm also going to use Edgeful statistics that, number one, midnight price. So midnight is way above here. I talk about it all the time. I like to use a basic rule of thumb that if we are trading below midnight, I see that we are in a discount of the daily range. If we're trading above, I like to look at the market as in a premium of the daily range. So we were in a discount. We have the retracement stats that maybe, James, you want to pull up in a minute. And then on top of that, just the last thing to go over it, the initial balance. So we know that we break at least one side of the initial balance almost every day. I think it's like, 12%? Edgeful will tell us, but very low percentage that we're not going to break one side of the range. So now we have two key levels. We have midnight that could act as a magnet. And the theory is once we've gotten past the midpoint here, like it just makes sense for me with all the other context that I think we're coming to break the opposing side. We're going to break the upside today. So that's the other reason for the target here.
Roger that.
I wanted to mention something on the initial balance because last week we had one day where we didn't break either side of the initial balance. It was Thursday. And that has only happened 1.8% of the time in the last 5 years.
Yeah,
so
it's like
less
insane.
than exactly. And so now using that to trade today, we didn't break the initial balance low when we tried to push lower. So then we would, in theory, be trading to initial balance high to get that break.
Yeah, that's the idea. And listen, I mean, we are very bearish on the higher time frame right now. So this is kind of the last key level for the bears, in my opinion. And we are, we're getting some minor rejections here. This trade could still come down and hit my break even. It's very possible, but I'm just going to take the risk here. Trade is
locking the stop or taking profits. No taking profits.
No, I don't do partials. And on this trade in particular, I mean, I'm only in for a couple contracts, so it's small size. It's a Monday. I'm getting light on it.
Yeah.
If this hits the full TP, it'll be a worth win if it hits my full TP. If I start taking partials here or close it, it's just I'd rather just give it the room it needs, or it hits my break even. That's fine.
Sure. Okay, roger that. Okay, let's speak about, let's just pull up my chart over here. Thomas, we'll get your thoughts as well. I just want to mention, we do have a NVIDIA earnings on Wednesday, so that obviously could be quite instrumental this week. We did speak about this on our Black Shirt Club, so our private mentorship, which you can check out in the link in my bio. Our coaches meeting at the start of the week. We don't really have any high impact news really, like a CPR or FOMC to kind of shake things up. But yeah, Thomas, what are your thoughts on the market? We'll speak about that. But just know that we do have NVIDIA. We do have NVIDIA earnings on Wednesday, and I believe that is post-market. You can see over here, 23:20 my time, so post-market. And then we do have daylight savings coming in 2 weeks' time, I do believe as well, which will obviously be quite nice for me in South Africa. The close will be a little bit earlier, an hour earlier, because at the moment I'm 7 hours ahead of Eastern time. So let's speak about, Thomas, if you can bring up your thoughts on the market, we can speak about a couple of Edgeful reports as well. Just want to note that, so maybe Zach, like a good profit target could be back towards that daily open price where we actually, we have on the NASDAQ. So the daily open price would be over here. We still have a couple of points. You can see I've got that daily open over here. You can see on my chart. We're still on the cash index, the real market. We still are 60 points away from that on the cash market pricing. On the NASDAQ, something just interesting to note, we are trading below that 5-day SMA, as Zach was mentioning. The high time frames are bearish. Okay, but let's
throw me on screen.
Yep. Let's get you on screen. There we go. Yep.
So this is something I've been watching for a while. I've had this is like a separate chart that I've had marked up for, I don't know, basically 2 months now. And what I'm noticing is this 6,100 level is a key rejection level. So on December 18th, when we had the FOMC meeting, we tanked like 3% in that afternoon. And then that set up this 6,100 level for being a continuous failed level to make new highs. So we back tested that level, rejected it, and then we started to form a little trend line. We break the trend line. We again fail to make new highs. And what I notice here is when we fail the 6,100 level, it's in one day. We're dropping between 1.5% to 2% in one day, failing that level. So we had the tariff news that caused the second drop from 6,100, and then we rallied that week, dropped again the next Monday on tariff news, rallied, and so we've been like seeing very similar price patterns. Then on Friday to end the week, we failed the 6,100 level. This red line is the start of year VWAP. So for me, what I'm seeing is a pinch between 6,100 and start of year VWAP consistently since the 23rd of January. And last week, we actually had our first break of this trend line, trying to buy. So now buyers are trying to hold the 6,100 level. And then again, we see on Thursday, we just continue to fall off and tank. Or yeah, it was Thursday and Friday that we failed this level again. We're back at the start of year VWAP. And today is going to be a big day. Are we going to be able to hold the start of year and try and maintain some bullish structure going into this week? Or are we going to, continue this failed 6,100 level and see a deeper pullback?
Yeah. I mean, just to look across the board, good thoughts there, Thomas. Just across the board, I just want to NVIDIA looking pretty bearish. I mean, we are trading below previous day's lows. We've kind of taken out this level now too. 135 level we swept that today. So we are trading also below the 5 SMA on the daily time frame. Let's just bring up Tesla. Tesla doesn't look pretty bullish as well. I mean, that doesn't look bullish. We're also underneath the 5 SMA. Meta, who's been on an absolute tear, has had pullbacks off its all-time highs at 740 off all-time highs. We are actually down, which we reached on Tuesday, actually last week. We are currently down 8% off those all-time highs. Let's just go to Apple. It's kind of the only stock that is actually looking pretty bullish at the moment. That's above that 5 SMA on the daily time frame. Microsoft, which I am looking at shorting at the market close here today for a swing position, is also not looking too great. As you can see, I'm waiting to place my swing position on short on Microsoft. I think with the stops at the highs here at 415, we could probably see 380 back towards that level there that I've got. I mean, back towards, as you can see, here we go, this level that I've got in mind over here, back down towards here. So it's not looking too bullish across the stocks, obviously, which is obviously what the indexes are comprised out of. So Amazon as well has also been pretty bearish. Amazon trading now under 220. I mean, look at that. You can't argue that this has been pretty bearish as well. Now, I know you on an intraday basis, you're not looking at the correlation from the stocks, but you got to keep this in mind, right? Do you guys have a look at any of these things?
Absolutely. I mean, I always choose the highest weighted stock to put the most weight on. So for example, right now, NVIDIA is really driving the market. So when I take positions, I'm absolutely just flipping over to see where NVIDIA is on its chart. Because if we look at today's sell-off as an example, as soon as we start, NVIDIA pumped up to almost 3% today in the first 10 minutes of the open, and then tanked to minus 2% within, the same hour. And that chart, you could plot the same candlesticks over the NQ or ES, and you'd see very similar price action. So for me, I'm always looking at NVIDIA to make sure that it's in alignment with my trade.
Brilliant. You, Zach, you don't do anything like that, I'm assuming.
I mean, I'll watch NVIDIA. I like to know where it's trading on a higher time frame. Sure. I'll take a quick flick over there, but there's nothing pertinent to my exact strategy. But I do like to know where NVIDIA is, at least, especially for trading NASDAQ.
Sure. Brilliant. Okay. So that's just my thoughts. I mean, I'm got some alerts here just on Google, Microsoft, and Amazon. These three over here. I am looking at possibly entering some shorts. Heading into market close here. And again, I can trade this on my personal account as well as with FTMO, which I do enjoy trading. So we're going to have a look. Stocks, obviously, the only crap thing is you can't close them. There's some gaps between them pre and post market. But yeah, some potential. Yeah, again, Amazon definitely breaking some daily support here. Could we see back to $200? Yeah, back to the daily 200 EMA. Of course, that would bring the market back lower as well. And as Thomas was actually mentioning, I think we're also mentioning this on stream with Andre, Thomas, if I'm not mistaken. But look at this. We are bouncing off these all-time highs pretty aggressively over. We are moving higher, but we are bouncing off these highs quite consistently. Okay, let's speak some specific Edgeful reports. Give me one of your favorites. Zach, you go first. One of your favorites, and how maybe can traders use it to implement into their own trading.
Initial balance breakout, 100%. Let's pull it up. I got it right here in my bookmarks. I mean, this is one of just the major keys to my trading is the initial balance. If we look at NQ specifically as well, I mean, the stats have been crazy for the last 6 months. I was going over this with Andre. I mean, they've just been, you can't fade this. You cannot fade this right now in a Trump presidency. So single break of the initial balance has been happening 82% of the time. If you guys don't know what the initial balance is, it is the first hour of the New York session. So 9:30 to 10:30 a.m., we're going to put in a range. And then once that range is formed, if we get a break of the upside, for example, there is a 15% chance that we're going to come all the way back down and break the lower end. Now, that doesn't mean that you just buy a breakout of the initial balance, but it's a great foundation for building a directional bias, right? So we get that break of the IB high, then you can start marking out relevant levels and look to get involved on a long, preferably on a pullback, right? Because the way I see it, once we break one side of the initial balance, any trade in the opposite direction of that initial break is just an opportunity to get in at a better price 82% of the time. So that's the way I use it. It's proven to be the most consistent and powerful report for my trading personally. And last thing, this is looking at the data for the last 6 months is really important for getting the current market conditions. But what's unique about this report is that it is consistent over a much longer time horizon. I mean, the stats have virtually stayed the same. I believe right now for the last 5 years, once this loads, I think it's like 75% of the time. We've got
that's pretty crazy.
So it's statistics that you could trust on a longer time horizon, and especially right now. Right now, it's something you just do not want to fade. Yeah, 74%. Yeah. So yeah,
sure. I love that, Thomas.
Yeah, that's actually a good segue into mine, because I was going to say, so for me, the opening range breakout report is by far my most used report. And I used to, when I first started using Edgeful, I would try and put it on the farthest time frame. So 5 years, 3 years, and see what that data said. And if we look at it from 5 years out, it's a 60% double break. And for me, that's not a lot of edge. But last year, when we would put it on 6 months, 3 months, this number was at 70%. So I knew that the double break was happening a lot more often. But now, as you see, if we put it on 6 months, it's only happening 55% of the time. So what that's telling me is intraday, we are having better trend days. We're not consolidating and having choppy market conditions right now. And like, if you look at today, we just extended from it and just push away. So when I know that we're not double breaking the opening range as much in the recent months, that gives me more confidence to take an entry when it's just broken one side of the range, rather than, waiting and trying to take it long after it breaks the bottom, which was a setup that I was taking, 6 months ago. So just using Edgeful's date range to find what's actually happening in the current market conditions has been extremely helpful, specifically for this report.
Yeah, it's actually interesting that you bring that up, because in terms of it's good to backtest in that, but something that worked 5 years ago might not be working in current market conditions. So that's why it's good to always see what is actually happening and what's prevalent right now. I just want to bring up the DAX. I had some nice shorts on the DAX here too. So I'll go over my favorite report. And my favorite report is that previous day's range report. I would say that one. But because I speak about it so much, I also would like to plug another report that I really, really like using for stocks, specifically because obviously stocks are only open for a set amount of time. They're open from 9:30 a.m. Eastern time to 4 p.m. Eastern time. So I'm going to bring that my second favorite. I don't know if it's my second favorite, but anyway, it's one of my favorites. I got about 5. There's so much good stuff here at Edgeful, but let's go to, we'll keep it another 2 to 3 minutes. We don't want to go too long. I know you guys, I've got some calls. But let's go over this opening candle continuation. Basically, this can be paired, and we do have a video coming out. This can be paired with other reports on Edgeful, such as that initial balance report. So what this basically tells us, and let's go to Apple. Let's just use Apple, for example. In the last, and this is quite nice when you go to it, you see the opening color is actually green. Apple, as mentioned, the only stock that's actually holding up today, whereas you can see in the video would be probably bearish if I'm red. Yeah. So let's go to Apple. Well, NVIDIA. Let's go to NVIDIA and Apple. So you can actually see in the last 6 months that opening candle continuation. So from 9:30 a.m. Eastern time to 10:30, if the first hour is bullish, how often do we close green and vice versa for shorts? You can see over here, 82 and 77% of the time. Now you can also look at this by weekday. Some days might be more prevalent than others. For example, if we maybe come to a Wednesday, it's 90% for the longs, but only 64% for the shorts. So maybe that's not a good stat that you want to be looking at. Then maybe you need to pair that with like an initial balance. Maybe that's something that you look for. So that's why I like Edgeful. It's really, really neat in real-time data. Let's have a look at Apple. Does this work with Apple? Yes, you can see in the last 6 months, 75 and 42. So Apple's obviously been very bullish. You don't be shorting Apple. Let's basically put that from those statistics. You don't want to be shorting Apple with this stats in the last 6 months. Okay. Let's go over Monday, Tuesday. You can also see, look here, Mondays, Tuesdays, 88% of the time, almost 89 and 75. So that's again, you don't want to be shorting Apple on a Tuesday, Wednesday. It's only got a 25% chance if the first hour is bearish. So this is stuff that you can walk through in real time. Whereas look here, on a Friday, this is interesting. Have a look at this one. On a Friday, when the first hour is bearish, 94% of the time we close red. You see, compared to a Wednesday, only 25% of the time. So that's what I do like about Edgeful. It's real-time stuff, real-time data. But yeah, I appreciate you guys being on with me. Let's do this. Why is it going like that? There we go. Get up like that. It'll make us look all good. Yeah. If you want to follow these guys, I'll put them in the link in the bio. I appreciate you guys joining me as always. And we look forward to the next one. We do these every single Monday. So yeah, we'll see you guys then.
Yeah, see you guys next week.
Awesome. Have a good one, guys. Thanks.